Profit Maximizing Moment. Today I'm going to confuse you. I'm not doing it on purpose, but I know I hate covering a lot of percentages and numbers and rules and all that kind of garbage, but you really do need to pay attention to this one because it can make a big dollar amount. I just did a calculation for a client, and it's going to get them back roughly $75,000 in the first quarter. All right, what am I talking about? I'm talking about the employee retention credit. All right, here's what's happening. The new law, as far as that was passed on December 27th, 5,000 pages of stuff came out. A lot of us didn't catch on to that this was buried in there, these changes, until mid-January. And that means some of you might be thinking you missed it. You didn't. All right, so let's talk about this. What was the employee retention credit? First of all, understand, it is technically two parts. What was in 2020 and what's in 2021, and they have different rules. So we're going to talk about first what the rule was. Sorry about that. It's tax season. You're going to hear the alarm going off as people come in and out. Anyways, what it was is that under the old rule, if you had a 50% drop in any particular quarter or were closed, all right, if you were closed for any particular time by a governmental agency, a ruling that said you had to be closed, then you could qualify for this employee retention credit. All right. Problem: you couldn't get the PPP loan and the employee retention credit at the same time. So if you qualified for the PPP loan, we usually just went that way. If for some reason you didn't, or you could get more money this way, we went this way if you had a 50% drop. Or if you weren't sure about opening up, you weren't sure we were going to open, we got to thinking maybe we better do the employee retention credit. Anyways, what the rules were is that it was up to compensation. Now, before we move on, credit, what does that mean? Well, credit is a dollar for dollar off of a tax. So in this particular case, you get a dollar off. Once you calculate the credit, you reduce your payroll taxes by $1 for every dollar of credit. It's not like a deduction. A deduction is I take $10,000 off my income, I multiply that times let's say a 25% tax rate, I save $2,500. If I have a $10,000 credit, it's worth $10,000. All right, so that was big, but it wasn't that useful. I did 55, 60 PPP loans and probably 3 employee retention credits under the old rules. And it was nice. I mean, it was 50% of the first 10,000 in wages for the year. Okay. So what changed December 27th? Well, a lot of big changes. First of all, you could now get it with a PPP loan. If I got a PPP loan sorry, the world is going crazy. If you got a PPP loan in 2020, you can now go back and see if you qualify for the employee retention credit. Now, I can't use the same wages. So let's say I was down in the fourth quarter of 2020, and this is for wages after March. I forgot the date. March 13th, I think. Yeah, March 13th of 2020. So we're talking about the second, third, and fourth quarter. So let's say in the fourth quarter I was down 50% because the second wave of COVID hit us. We're in El Paso and you got closed again, or just people weren't going out. Okay, so I qualified for the fourth quarter. I got a PPP loan back in May, and I used the wages. The wages that I used for that I can't take into account. Now, that gives me some planning. The problem is if you already did the forgiveness, you probably used the 24-week period like I did for a lot of people. Most of those don't look like it helped. Wouldn't have helped because they wouldn't have qualified for the employee retention credit. But I can't use those wages over. But let's say got it in May, I did 24 weeks, and I went to the first week in October. I can now take the wages after the first week in October all the way to December and take 50% of the first $10,000 and apply it to my payroll return. Might do the opposite. I may go back earlier. Now, I'm pointless right here at February 4th. If you didn't, you could have taken anything you missed on the 941 you did, and that was due Monday. If you didn't do it, no big deal. You just now file a corrected 941 for the quarter that it applies to. So you might have 2 or 3 quarters there. What's the changes? Well, first of all, they now changed it from $10,000 a quarter for last year. This is all 2020. I'm going to get to 2021 in a minute, which is where I think the big dollars are. All right, so for 2020, they changed it to $10,000. Sorry, gross receipts drop. Where am I? It's, oh, yeah. So they put in group health plan expenses and wage count for ERC if not funded by PPP loan. I basically covered everything there. I apologize. I was going to jump ahead. Excuse me. Where's the dollars, though? The dollars might be in the new PPP loan. Sorry about that. I'm sorry, the employee retention credit for the 2021 rules. Let's talk about that. 2021, you can still coexist with a PPP loan. So if I got the second round of PPPs, which I've just been putting in, and let's say it gets funded in February 15th, I can still use the wages for the time period from January 1st to February 15th. And let's say I'm down in the first quarter and down in the second quarter, I can use any wages after that time. Here's another nice thing too. If you read the directions for the forgiveness application, it says your time period is from 8 weeks to any time up to 24 weeks. So let's say I get a PPP loan for $100,000 and I use it all up in 15 weeks. I can cut it off at that time. I also might want to use less of my weeks if I qualify. I might want to put in rent, I might want to put in utilities, there's more stuff that I can use as long as I use 60% for payroll. So there's some planning opportunities here. If you look and see that you're 20% down in the fourth quarter, why? Here's what they allowed you to do. They allowed you to have a safe harbor under prior quarter's gross receipts. And it's gross receipts how you do your books. If you do your tax return on an accrual basis, in other words, when you bill, then you need to do your comparison to see if you're down 20% on the accrual basis. If you do your tax return on a cash basis, you need to do your calculation if you're 20% down on a cash basis. Same way for the PPP loan at 25% drop. Okay, here's what happens. I got a client who dropped in the fourth quarter of 2020, okay, October to December, just last year, by 33% or something like that. I can't remember exactly off the top of my head, but it was more than 20%. They automatically qualify for this for the first quarter. Crazy. They could have a great first quarter, maybe be 50% up, but they still qualify because the fourth quarter was off. Now, what's nice, first of all, remember, this is for people with less than 500 employees. It's no longer 10 per thousand per year. It's 10,000 per quarter for 2021. Okay, and the credit went from 50% of the wages, if I up to 10,000, to 70% of the wages up to 10,000. So now I have, let's say I end up with $100,000 worth of wages in the first quarter, and I was down more than 20% in either the first or second quarter. That could be worth $70,000 credit that I get back, and it's refundable. All right, and what I mean by that, I don't know if I would refund it. I mean, I'm telling my clients, don't wait for the IRS to send you. Once we know you qualify, we're going to use that to reduce the EFTPS payments, the payroll tax payments that you're making on a weekly, bi-weekly, monthly basis until I use it up. But if you get too much, I guess you got to ask for a refund. But what I'm saying is there's some big bucks here, okay? And yeah, it's available. The credit for 2021 is not available unless the credit for 2020, you have to be in existence at least part of 19. That doesn't apply to this for the year 2021. Group health plan expenses counted for both retroactively. Remember, you got some things you can play with here. I mean, you can make an election to cut off your to get more. No, you don't have a choice. You get the PPP loan, the second one, the day it's funded, that's when those wages start counting. But I can cut them off if I use the wages in 8 weeks, or I got to go at least 8 weeks. Okay. So if I say get it February 15th, I'm looking at March 15th, April 15th, and if I qualified for the first quarter, I still may qualify for a chunk of part of the year. Okay. The end of April, May, and June if I had a bad first quarter, or if I had a bad second quarter. Let's talk about that. So let's say I didn't have a bad fourth quarter, but I have a bad first quarter. I really won't know until I finish March 31st, but then I do qualify and I can take the credit and either ask for a refund or offset it, carry it forward, and I'll go to the second quarter. All right, I warned you at the beginning. This stupid thing is confusing. I threw a lot of numbers and statistics at you. I just know if you have a drop of more than 20% in the fourth quarter, fourth quarter of 2020, first quarter of 2021, second quarter of 2021, and you don't take advantage of this, you're probably leaving money on the table. All right. So you need to get with your accountant. You need to get with your CPA. Call me, whatever. I mean, all right. You need to not leave this money on the table. It's crazy not to. Here's a problem that I see coming. All right. The person that's doing your payroll, whether it's you doing it internally, ADP if you outsource it, or a bookkeeper that you have, is probably not the same person applying for the PPP loan and applying for the forgiveness. So how do you coordinate all that? It's kind of probably you as the business owner if your accountant's not going to coordinate that to make sure that it does get coordinated, because there's a lot of pitfalls here if you're not careful, and a lot of money that can be left on the table. I guess what I'm going to say is, look, you've been paying taxes your whole life. The government shut down things. You didn't do anything wrong. If you qualify, go get it. It may be the difference between staying in business and not staying in business. All right. So that's the same way I feel about the PPP loans. If you qualify, get them. I mean, I got people that are going, well, I don't really need them. Well, you don't know you need them. You don't know what the business is going to be like in 30, 60 days. You really don't. And maybe need is difficult. I mean, on this, you don't have to prove anything. This is not a loan. The employee retention credit has nothing to do with the bank. It's strictly with the IRS, and it's on your 941s. All right. So, hey, I know I covered a lot. Don't get too crazy about this. Shoot me an email if you're confused. I've answered phone calls. I had a call from somebody in Las Vegas. I had another call from somebody out in California. I forget exactly where they were. Picked up the phone, called them back, answered. Not a big deal. All right. So, hey, until next time, this is Wayne Blau saying, let's make this our most profitable year ever. And this is part of increasing your profits. All right. Thank you very much.